Hey, everybody. Happy Sunday evening, everyone. Welcome to our weekly breakdown, or actually weekly pre-week check. I don't know what you want to call it. But one of these days we'll come up with a word for whatever it is we do on a Sunday evening to get prepared for the week. This has been a habit that I've had throughout my trading career. I never felt happy on a Monday morning drinking my cup of coffee without knowing pretty clearly what my watch list is, what type of market sentiment I'm dealing with, and generally what the plan was as the week began. Even if all that meant was knowing when the hot zones were coming out, knowing if we were in earnings season, which earnings hot zones we're going to be dealing with, and the overall trend of the market. Maybe it's chop, maybe it's bearish, maybe it's bullish, but just having that general feel. And that's what Sunday's about. If you're wondering, I got a couple emails last week, and folks were asking, well, Rog, how much time do you spend? Is it just the time with us in the weekly show, or a little bit more than that? I'll tell you what, gang, it's really never more than about probably 45 to 60 minutes, maybe 90 minutes if I have a really beefy watch list, but it does not take that long. It's not as if you've got to take a big chunk of your weekend out, but 45 minutes is usually a really good way to be prepared, take some notes, put some ideas down to paper, look at your watch list, look at the trades that you took in from the week prior. If you've been doing a lot of what we've been doing in the Sector Secrets Mastery, the nice thing about that is my mastery folks, shout out to you all. We haven't been taking a lot of positions into the weekend because we've been focusing on day trading Monday through Friday every morning for about an hour. And that's it, as we're waiting to see when the overall volume and when the overall trends and clarity come back to the market. And until then, we're perfectly fine being nimble. We're perfectly fine saying, hey, 9:30 to 10:30, what you got? And then just knowing that 1 hour can set up a number of great trades for us. And we don't care what the market does in terms of higher or lower, whether it does the same thing again tomorrow. Remember what day trading actually is, gang. All the day trading is you and I communicating to ourselves that we're going to be flat by the end of the day. It's not a strategy in and of itself. It's really more of an exit plan. That's it. Maybe you're trying to find clarity in the morning. That's exactly what we do when we're day trading. A lot of you know it's volatility, it's time, it's market structure on that 5-minute time frame. And then that just frees us up every morning to just accept that we might see bullishness one day, a stall the next, or maybe a pullback. Anyway, that's kind of the way we've been navigating through August. That kind of brings you up to speed with what we've been doing. So what I figure we do is take a quick look at the economic calendar. Not a lot this week, really at all. Take a look at the housing market, low heat hot zones, which don't mean that they're going to be ignored. So an Empire State Manufacturing Index or the NAHB Housing Market Index, it's not that they're going to be ignored. It's more along the lines of, if there is nothing else to think about, there's nothing else in play, might they have a little bit more of a disproportionate influence on the market, sans any red hot zones? And I think that would be true. We scroll into Tuesday. It's again pretty quiet on the U.S. data, although building permits, housing starts could be very interesting. Cap utilization rate, we'll keep an eye on things like ITB, XHB. And then we roll into Wednesday. Now, we don't have an FOMC meeting this month. They're taking August off, but we do have the meeting minutes. What are the meeting minutes? Imagine being a fly on the wall during the meeting, and we get an idea of what's being discussed, who's dissenting, how unanimous were the votes, are they in agreement, is there a lot of disagreement? And so that's where that FOMC meeting minutes allows us to get a sneak peek into the conversation happening. Our typical weekly unemployment claims, existing home sales. We have a few FOMC members speaking, but pretty quiet this week All right. Mostly housing numbers. So ITB, XHB could be really interesting sectors to watch this week. All right. So as always, gang, we'll take a look at some of the bigger picture macroeconomic rate of change. The most important being what's happening on the target rate probabilities. Gang, remember, anytime we're discussing macro, we are talking a longer time horizon. Now, there's a phrase that is actually so overused, it's really worthless at this point. And that's a phrase like bigger picture. What does that mean? Bigger picture. Well, it's sort of purposely ambiguous because if a trader or an analyst on TV starts talking bigger picture, well, they can make it whatever they want. They can make it so that, well, my opinion isn't wrong. The market just isn't doing what I've told you it's going to do. So I actually hate that phrase. It's not really useful. What we're going to always talk about, and hold me to it, is what the time horizon is. So when we are looking at macroeconomic rate of change for where the Federal Reserve is planning to take rates, I'm going to give you a cutoff date. We're going to talk about the end of this year, right? Because anything less than giving you when this idea could play out or impact the market, gang, you know that's really not useful. It's just meant to put an idea out there that has the wonderful blessing of never being held accountable. I see too much of that kind of analysis out there. Being held accountable means this is what I think is going to happen, and it's going to happen by this date. And here is the reason why in data or in price. Keep that in mind. Hold that to yourself. Hold that standard for yourself, right? So what are we talking about? December as the target rate and the target for when the Federal Reserve is going to take the rates to probably what we're expecting to be the highest they're going to be within this tightening cycle. And then we peak and plateau. We've been talking about that in Charts and Coffee quite a bit. Rates will peak come the December meeting, and then they'll plateau going into next year. Where are they going to plateau? Right now and throughout 2022, it's been mostly 3.5 to 3 3/4 points. That's where we're going to peak and plateau by December 14. That meeting is when we're likely going to see the very last rate hike from the Federal Reserve for this tightening cycle. All right, no bigger picture, shenanigans in here. What are we expecting? When are we expecting it by? Now, what does that mean? If we're here on August 14, pretty certain that the Federal Reserve by December 14 is taking rates to 3.5 to 3 3/4%. We're not the only ones that know this, and that's wonderful. We don't have to be the first, gang. We just don't necessarily want to be the last. But if we know this is what's being discounted, then that means broadly the market knows it too. The more we stay steady to this expectation, the more likely the equity markets have less to worry about, right? Inflation is going to map to this expectation. Growth is going to get factored into this expectation, as will jobs. Those three big ideas. All right. So let's go ahead and jump into your questions. Let's jump into the charts as well. That's where all the fun stuff is anyways, isn't it? All right. So let me get, oh, you know what? I did mean to remind everybody, tomorrow, Monday morning, my Sector Secrets folks, remember, we've got our day trade in the open, 9:20 to 10:35, Monday through Friday. We've been holding this schedule now for 2 or 3 weeks, been wonderfully received. A lot of folks love starting their day with a good, 75-minute session. We get some day trades. We are pretty much done by 10:35 a.m. Eastern. So we've got that coming up. Remember, we've got our Monday tech session. You want to know where the wave, grab, propulsion, Darvis, hourly price movement range indicators are, some settings, different issues with charts and layouts. We've got our wonderful tech session with the Lorna bot tomorrow as well. So Monday's a pretty big day for us in the room. Remember, Wednesday, we're going to jump into that longer term portfolio position trading conversation. We're going to revisit that double green uptrend watch list that we've been building now for 2 weeks. So we are ready to hit the ground running come September. So when we start to slow down the, Two main accounts. Oh, okay. Sorry, I'm getting a text from bot, making sure I'm not getting any audio weirdness going on. All right, all is well in the world. So once we get into Wednesday, we're going to continue to build on that double green watch list. And that means come September, we will know exactly what we want to buy the dip on. So we're building that watch list. And notice, by the way, over the last 2 weeks, it continues to expand, including indices, including more sectors, not just those relative outperforming stocks. So a lot to be excited about as we go into next month. All right, so kicking it off, Javier asked, thank you for the time. Can we expect a pullback on overbought sectors? So Javier, if we're talking overbought sectors, let's go ahead and pull up the daily time frame and start talking about some of our main sectors, starting off with the king of the sectors, XLK. All right, what do we know about XLK? What we know about it is that it has Apple and Microsoft, that it's weighted the first sector in the S&P, the first sector in the NASDAQ, and the second sector in the Dow. What else do we know about XLK? Well, it's double green, isn't it? It has been since the beginning of this month. We could say it went double green on August 3, right? This is not an overbought market, right? This is a straight up uptrend. So there's no pullback in overbought unless we're in chop. XLK would not qualify. All right, what about XLY? Another trending market. So there's no overbought. That wording is actually just not correct for the underlying psychology. There's no such thing as an overbought uptrend. Uptrends are always in a perpetual state of imbalance. That's why the trend. An oscillator that's looking for overbought and oversold, like my beloved sector slow stow, the slow stochastic on a 21K 3D, anytime a market starts to trend and we've gone double green on the market structure, it's going to perpetually be stuck at overbought, because that is the view of the market that the sector, that any slow stochastic, that any oscillator is going to be stuck in. If all I know is to call something overbought and oversold, right? Let's say I'm an oscillator and all I know is to call something overbought and oversold. When a market starts to trend, that's just overbought, because the oscillator is not designed to work in a trending market any more than we're supposed to show up at the tee with the putter in hand. Great club, wrong shot, right? Does that make sense? So we need to find a sector that is not trending. XLV could be a conversation like that. Neutral market, trading up into resistance. That would be an overbought. But the word pullback in the context of chop, right? So I like to use pullback in the context of a trend. And then would I look for some fatigue possibly in some of these non-trending markets like XLV or XLC? Absolutely. But what I look for in XLF, be careful here, because this is very freshly, take a look here, it's just now trying to go double green. In fact, Friday, we got our very first glimpse of bullish trend joining the bullish momentum that's been in play since the end of July. So be careful here. It's a little bit of a transition. This is vulnerable because it's still going to carry with it a lot of the choppy market expectation, but the trend is trying to reorganize. So be really careful, Javier, the way that I look at it, be really careful where I'm looking for something being overbought, and do yourself a favor. Don't treat trends as markets that are overbought and oversold. Treat chop as a market that's overbought and oversold. All right, next up, Nick asks, when I want to trade the NASDAQ, sure, as an index, which it is, right? What do I use, NAS or QQQ? I'm open to both, Nick. I'm open to both. So NQ would be the mini NASDAQ. It's probably the most popular way to trade NASDAQ futures. Then we have MNQ, which is the micro NASDAQ. So this is the way you can trade that contract that is 1/10 the size of the mini. So lower initial margin and then lower per tick dollar value. And then, of course, you're right. We've got the QQQ, which would be the ETF alternative for the NASDAQ. Sometimes I'll even consider, Nick, XLK, XLC, and XLY. These are the top 3 weighted sectors within the NASDAQ. And that allows me to crack open the NASDAQ and see maybe what the strongest corner within tech actually is. So that's the way that I'll look at it, Nick. Those mini, micro, the ETF alternative, and then also the 3 top weighted sectors. All right, next up is Mr. Walker. Use price of option for entry or price of stock. Oh, okay. What do I use? Price of stock or ETF, right? I use the underlying, what would be called the underlying. So if I'm playing a stock option or an ETF option or a futures option, I'm still going to look at the value of that stock, that ETF, or that futures contract before I go trade an option on it. So the underlying, as it said, the actual stock, the actual ETF, or the actual futures contract. Hey there, John. Are we in a buy the dip outlook for Monday? Depends on the symbol, right? What is the alternative ETF to look at with Tesla, with the Tesla split? So I don't play splits, John. I think it's kind of a funny retail trading phenomena where stocks going into a split love to rally, even though historically you're going to see approximately a 10% pullback on the value post-split. So whether you buy it pre-split or post-split, whether you buy Tesla for $900 and get 1 share, or after the split, pay $300 for each share, still spending $900, still ending up with 3 shares, or you wait for the split and then wait for maybe about, a $30 pullback. That's kind of the thinking that I have. That's the typical math around that. What ETF is going to be most concentrated with Tesla is going to be XLY. Now, are there other ETFs? Of course. You could think about ARK and things like that. But I always think about the heavily weighted sectors within the indices. Of course, SPY and QQQ have a fair amount of Tesla. That is a heavily weighted stock within the indices. And it's a very heavily weighted stock within the XLY consumer discretionary ETF. Amazon, Tesla, and I think either Home Depot or Visa right now, depending on the weighting. So XLY is where I would look. XLY. Now, this is by no means the only ETF that Tesla is heavily weighted within, but it's the one that I look at where it has the most influence on the broader averages, and the broader averages have the most influence on it. So there's a nice correlation to XLY and the NASDAQ when we look at Tesla being that common denominator. All right, so hope that makes sense. All right, next up is XLE. So you're looking at a you're looking at a longer term setup. So let's go to the weekly for that then. I am Groot. Neutral, XLE. I'd like to see it as close to 65 or 60 as possible. As close to 65 or 60 as possible for that longer time horizon. All right, what does that mean? Weekly time frame, minimum 6 months. Minimum 6 months. I will give it a certain amount of time to stay at or stabilize above the 200 exponential. And at that point, if we can reorganize into a trend, or we can at least stay above the 200, then I'll just continue to hold it as long as we're gaining some traction to the upside. So at that point, I can consider a 1 to 3 year time horizon, but at minimum, I'll give it 6 months, and or a stop loss based on what I believe is an acceptable amount of risk as I'm building a position that has a longer term expectation hold, but still must show me that the buyers are showing up, still must show me that there is support. Oftentimes it's that 200 that I'm most interested in on that weekly time frame. All right, Nancy asked, thanks for sharing this time with us on a Sunday. My pleasure, my pleasure. Does your watch list change greatly from week to week? No. The daily and the weekly? No, not at all. And are there things on your list every week? Nope, that's not. So it really means, do I have a symbol that I will keep on my list regardless of market structure? No. It has to have market structure. It's very much whether or not we can have an uptrend, preferably, a downtrend, that would be the next best, or if we have proximity to the upper or lower edge of chop. So uptrends usually going to be my preference. So there's very little that just gets to be on the list no matter what. In other words, no symbol just makes the team because it showed up, right? No symbol just gets to make, everybody has to have a tryout. Everybody has to have a tryout to make that list. So thanks for the question. Hey there, Andrea. Thanks for the great classes. Andrea, I wish I could take credit. Trish puts my classes together. She has for me since 2013 or 2014, back when we were doing Simpler Forex. If you can, for those of you that might have been around during the Simpler Forex days. So I cannot take credit for those, but I appreciate it. I like to think I put them on pretty good, but it's usually, those are all her brainstorming. You know, she watches the chats. She's in every single session that I do in every single room, and she's taking notes. And if I start introducing a new concept, she's going to be the first one saying, what is this new concept? Or are you just renaming an old one because, you know, you just got a crazy idea that day, Rog? So she's the one always holding me to that consistency. And if we introduce a new idea, make sure that we put some new content together, get it to the Countdown Trader, get it on the free videos. We can keep everybody on the same page. But I do appreciate that. Following along, great, but keep getting stuck on entry-level price. Trading options, you go off a futures chart for the price levels. How is it the same on an options chart? So Andrea, for bonds, metals, treasuries, indices, you know, anytime we're trading an ETF that does have a futures contract that is attached to it, right? We are definitely going to look at, for example, that question earlier about the NASDAQ. All right, let's go back on over there. If I'm going to trade the NASDAQ, well, that's easy. I'm going to keep an eye on NQ. But what if I'm going to trade the micro? I'm still going to keep an eye on NQ. What if I'm going to trade the QQQ, right? Options on the QQQ. You guessed it. I'm still going to keep an eye on the NQ. The only time I'm actually going to head on over to the QQQ, let's say, for example, this is just hypothetical, gang. Let's say I wanted to buy 13,555. For whatever reason, it's a buy in our book. Example, just an example, just a hypothetical. Let's say I wanted to buy that. The only reason I have to at some point be aware of QQQ is to look at where is QQQ trading, and I'm going to have to look at the last price. You know, where is QQQ currently at, so I know what an at or slightly in the money option is, and then I can go into the option chain and look for that strike. So even when I'm trading QQQ, MNQ, or let's say options on the NQ, which are quite liquid, by the way, I'm still going to be looking at this one touchstone symbol. The reason being is that it has the most complete view of what NASDAQ stocks are doing. In other words, this trades, it has one 15-minute break and one 1-hour break. It closes from Friday evening to Sunday evening, but the rest of the time it's trading. Unlike QQQ, which is only 9:30 to 4. That's a very small window of opportunity in terms of the actual time that it's open. It's not a lot of time compared to what the futures do. So I don't look at the QQQ as being wrong as much as it might be less complete, right? So when I look at the option chain, that's the process, Andrew. That's what I do in the room. So a lot of folks will know when we're setting up our day trades, in the notes that I keep, you know, showing us what we're going to buy and where, I'll use the NQ, and then I'll just show the traders during our day trading time I'll say, hey, what we'll look at is we'll go ahead and look at, during these hours a day when I have an NQ trade, I'll also say, hey, by the way, we can also buy the August, 19 QQQ, 330 calls or whatever it may be. So I'll always have that alternative in case for traders in the room that don't trade NQ, they've got that ETF alternative idea that is going to trigger when the NASDAQ futures reach the price that validates our trade, a trigger price. So yes, I think that made sense. So I hope my reply made sense. All right. Hey there, Alan. I'd like to get into your mastery. Absolutely. We've got a great group there. We'd love to have you. Question, does that mean you trade every day for the first hour and we can be in there with you each day? Yes, absolutely. Tomorrow, I'm going to finish Charts and Coffee. Hopefully you're there for me, right? For Charts and Coffee from 9 to 9:20. At 9:20, I log into the Sector Secrets room. We're going to, 300-400 of us there in the morning. So you get a great group of people, fantastic, lively discussion. We are very focused. It is a focused room. We don't have people talking about nonsense. We're not talking about off topic. We are together like a think tank focused on a single agenda of being supportive and profitable in this market. That's it. We got a very focused group. We are focused on day trading in the morning. So 9:20 to 10:35, I call trades. And I don't just call trades verbally. What you'll get is a set of notes that one, I send out to the members and I keep on the screen so you can see exactly what we're looking at, why we're looking at it, what the structure is, if we're long, short, what we want to do. So that's exactly what we do every morning. Yeah, I was showing that schedule earlier. This is the schedule. Anytime this thing is lit up, except for this gray session right there, that's Lorna's session, right? The rest of these sessions are all me in that mastery. Absolutely. Yeah. Let's see what we have here next. Stock hands, I think. Cool. Is there a reason you don't trade a few stocks that have large ATRs instead of trading a constant variety of stocks? Well, I don't trade a constant variety of stocks. Fair question. So remember, if you have a few stocks that trade a large ATRs, do they always trade large ATRs or might that list also fluctuate? I think the second part of that is I don't use average true range. I use price movement range. One is historical. That's what price movement range is. One is looking back 7, 14, or 21 periods. I don't use ATR, frankly, at all. But I use sort of the same mindset, right? The idea behind an ATR is fantastic. What is a typical range? But remember, ATRs can vacillate wildly because you've either got a 7, 14, or 21 period. So you're looking back 7 days, 14 days, or 21 days. I'm looking back 6 months on price movement ranges. So it is historical volatility. So I guess the first thing, stock hands, is I don't use ATR. Really never have. So as far as a constant variety goes, it's not that big a variety. Let me explain. When we go into the mastery on Tuesdays and Wednesdays, we start to, what I say, crack open the sectors. We don't call it sector secrets for nothing. In fact, it's kind of tongue-in-cheek. There's no secret at all. It's the consistency of looking at the high concentrated weighted stocks, just putting in the work. So secret is kind of sort of an inside joke, right? There is no secret to trading, is there? I just like the way it sounds. And it's alliteration, which I love. Here's the SMH, for example, right? You're going to have, give or take, the same 9 to 13 names in SMH week after week, month after month. Let's say we go to the QQQ, right? You crack open that QQQ, you're going to have the same 9 to 13 names in this top weighted part of the QQQ weighting at the stock level every single week, every single month after month. So I'm not really looking at different symbols and I'm not scanning the sea of thousands of names. I don't believe in scanning that way. I don't even use a scanner, gang. What I use is a layout that looks just like this. And I call this a multi-chart. It's just a flexible grid on toss. In the upper left-hand corner is the index or the sector. The next 11 slots are the stocks in the order that they are weighted within that index or ETF. So I'm really looking at the same sectors and the same weighting more or less week after week. So you really do get to know these names. And these, by the way, gang, these are the names that move the broader averages. In other words, these are the ones that are most concentrated in the ETFs that we are all talking about, all watching. And so this really is the motor of the market, right? And so that's what I watch. I watch that engine. I watch that motor of the market. And to your point, I don't want any, you bring up a great point. I don't want to trade a constant variety of stocks. I want to get to know the same weighted names across the same sectors and indices day after day, week after week, month after month. And so you'll see it's not a small pond because we have a nice number of potential candidates for trades, but it's not an overwhelming giant ocean either. So I hope that makes sense. And that's a wonderful question. And, it makes sense for me to be as transparent as I'm able to be, to explain what it is that we do and why I do it that way, So I hope that helps. And I hope that makes sense. And gang, just like that, boy, that show goes by so quickly. I appreciate everybody's time. I see there's a lot more questions that I did not get to. But of course, we're going to be right back here live tomorrow at 9 a.m. for Charts and Coffee, Monday through Friday. That's our simpler pre-game show. We caffeinate and dominate. So I hope that discussion was helpful. If you have some pressing questions, leave them in the comments section below. I do check those daily. So if there's something I can help you out with, feel free to leave that comment. As always, thank you for your time. Thank you for smashing that like button. Thank you for your comments and feedbacks and questions below. I'll see you tomorrow. All right. 9 a.m. Eastern. Be good to each other, gang.